Hello, I'm Rachael Jones for the Finance News Network. Today I'm at one of Centuria Industrial REIT's large warehouse facilities in Sydney. It's currently being used as an overfill site for bushfire donations. Joining me today is Fund Manager Jesse Curtis. Jesse, welcome to FNN.
Thanks for having me, Rachel.
Now, Centuria Industrial REIT's portfolio comprises a range of properties such as this one we're standing in here today. What does the fund offer investors?
Centuria is Australia's largest ASX-listed pure-play industrial REIT. We own a portfolio of 48 high-quality industrial and logistics assets with a total portfolio value of $1.6 billion. These assets are located in key metropolitan markets within close proximity to major infrastructure. The fund's objective is to derive rental income from the portfolio and deliver capital returns to unit holders.
Now, Jesse, let's talk about your half-year 2020 results. What were the highlights?
It was a really exciting half for us. In the acquisition space, we completed over $300 million of acquisitions, and leasing momentum drove a strong first half FY20 result. From an operational perspective, we leased over 63,000 square metres, maintaining occupancy at 95.8%. Pleasingly, the portfolio is well placed for the remainder of the financial year, with only 1.1% of the portfolio expiring before the end of FY20. In the acquisition space, we completed over $300 million of acquisitions, which substantially increased the portfolio to $1.6 billion. These acquisitions were highly complementary to the portfolio and are on strategy to acquire assets which are located in infill markets with close proximity to major infrastructure. Most importantly, we delivered a strong financial result with a return on equity of 13.4% and a total shareholder return of 29%, outperforming the ASX REIT 300 index.
That's excellent news. Now let's talk about the fund. Can you provide an update on the key metrics?
As a result of our leasing success and portfolio acquisitions, the WALE of the fund increased from 4.3 years to 7.1 years, with occupancy at nearly 96%. The portfolio size has grown to $1.6 billion, whilst gearing has reduced to 35.5%.
And what can you tell me about the tenant profile?
Our portfolio is well diverse, with over 120 tenant customers in our portfolio. These are predominantly in the industries of health and pharmaceuticals, manufacturing and logistics and transport. Some of the names that our investors would recognise are names such as Arnott's Biscuits, Fisher & Paykel, Woolworths, Australia Post and DHL.
And what can you tell me about your acquisitions?
We had a record year of acquisitions this year for CIP, with $300 million of complementary assets being added to the portfolio to grow our portfolio to $1.6 billion. Most notably was the acquisition of a portfolio of ultra-long WALE assets leased to Arnott's Biscuits, Australia's largest biscuit manufacturer. These properties were acquired for $236 million.
And Jesse, what is the outlook for industrial property and what underpins valuations?
Sure, the Australian industrial market continues to see strong interest from both domestic and international capital. The market is being driven by population growth, trends in online retailing and a scarcity of investment-grade stock available in the market. This is predominantly being experienced by the East Coast states of Australia. CIP is well positioned to benefit from these trends, with over 85% of the portfolio weighted to eastern seaboard states.
And to the last question now, Jesse, what is the guidance for financial year 2020?
CIP commences the second half of FY20 in a strong position, and today we're reaffirming our guidance of 19.6 to 19.9 cents per unit, and to deliver distributions of 18.7 cents per unit.
That's excellent. Jesse Curtis, thanks for the update.
Thanks for having me, Rachel.